So now I'm going to show you an example of a short on Bitcoin. All right, so we're going to follow the same exact procedures on this sort of trade. We're on the 15-minute frequency. We're scrolling all the way out so that we can see a full visibility. This time we're trading a downtrend. And the reason we see that is because if you looked in the other one, we had a range breakout followed by a corrective wave down. We have a low established here and then a lower low established here and a high, which means we are entering a downtrend. Are now going to be taking a position in the direction of a trend. You never want to fight the trend. We're shorting a downtrend on Bitcoin right here, and we're establishing that downtrend by a new lower low and a high. So we have two lows right here, a high, a low here, and then a projected reversal point right here. Basically, we have that impulse wave up followed by a corrective wave. We've established our lows. Then we want to use our Fibonacci ratio from swing low to swing high to get a pullback or a retracement level at the 61.8. Then we take our profit calculator right here and we draw it at the projection entry with our stop loss comfortably outside of the exterior of the trend. We have our interior trends that we're taking the trades on, and then we have the exterior trends that we're accounting for so that we don't unnecessarily get stopped out of. So we take a position here, assuming the price action comes down to the 23.6 level right here, we reduce our risk by about half. In this case, we do have to come kind of inside of the exterior of the trend. Maybe we can place it kind of just on the outside, so we're still reducing some risk, but we're not completely risking the full amount. We get a pull down to the 38.2 level, and then we have a secondary lift up to here, followed by another touch, and then we actually don't have it touch the 50 level till over here. So as soon as we have it touch the 50 level right here, our new stop loss is going over this high right here. So we're going to reduce our risk completely. Our new stop loss is going to be over this high right here, which means that we're probably about $100 in the money if we're risking $100 in this trade. So it's either we make a small gain or we wait for the 61.8 profit target right here, which was hit at this point, which would be a full profit on this trade. So once again, I'm going to erase everything and then we're going to go over looking at it on a visual level together. All right, so first, obviously, we want to establish the breakout, the range breakout of the trend. So that's obviously, we see a nice trend right here. We have a massive breakout right here, followed by a corrective wave all the way down to here. So we have our highs established right here. Boom, one right there. We have a bunch right here as well. We have our low established on this ridiculous pull down really quickly. We have a low right here that we will also want to consider. This is the first low, first couple highs, and then a low over here. So then we want to find our exterior trends. So we're going to click and go from this, can't see because of the arrow to be honest. We're going to go from here. I'm going to change these to exterior. So we have to go solid on these. And then we're also going to clone that, put that on the top right here. We're going to create interior trends now. So we can see some levels hitting off of here. So we see this level on the interior, some levels interacting over here. So we're going to make this dotted right here, clone this, and place this on the interior trends right here. So we see multiple levels tied up right in here where the trends are starting to react off of. Okay, so we actually have interior kind of switching to exterior, but nonetheless, you want to just make sure that you're taking both into consideration when you're taking this trade. Next thing that we want to do is we want to take our Fibonacci and we want to go swing low to swing high up to here. As soon as we have an entry point established right here, or a projection anyways, which would be falling right around here, assuming that the price action is getting close. Like if it's right around here, we're projecting right around here. So then we take a short position this time and we put it right at this point right here. We want to reduce our risk to outside of the trends comfortably, pull it down to the 61.8 profit target level right there. That's a 1 to 8 risk reward, so that's pretty ridiculous. So let's account for a little bit of volatility here just so that we're not cramping the trade. So that's a good level right there. That looks pretty realistic to me. So we know that we have great risk reward because we have a nice narrow channel, meaning that we can really optimize this trade and try to hit a banger. Then if you look right here, the price action comes all the way up, matches this level perfectly. We take a position on here It comes down to the 23.6 level at this point. That's when we cut our risk basically in half. It comes back up, creates a secondary high right here, and comes down, touches this, goes back up, touches our 50 level right here. This becomes our new stop loss over here. So now we're in the money on our stop. Stop loss goes right here at this point right here, and we wait for it to come down to this level right here where we are taking profits and we are covering our short at this price level right here. And that's exactly how you're going to navigate the InnovaTrade trading system. This is a short example. I just walked it through you in front of you. We're able to absolutely precisely nail this top right here, and that's how I'm able to generate the profits with this trading system on the long and short side, trading Bitcoin, Ethereum, basically any cryptocurrency that you can find that fits these sort of channel systems on the 15-minute frequency. So you can find these ever so often, usually a couple per week, and just line the trades up and watch them so that you can supplement your growth in your crypto portfolio by taking these trades. I'm going to periodically be adding examples to the course essentially, but I want to get this information out to you guys as soon as possible. So I'm going to be updating the course nonstop with more examples, more content, more information. I'm going to do something on Elliott wave theory, but I just wanted to explain these two systems. Now you have a way too long and a way too short. You know, you should have a rough idea of how to basically understand everything and use my trading system that is statistically proven to work, that I've back tested for years, of managing the trade once you're in, finding projections, finding trends, dealing with supply and demand, using the indicators we talked about to predict reversal levels based on supply and demand imbalances, and use that and use your fundamental information of cryptocurrencies in order to start trading them and start having a way smarter, more educated perspective on the way cryptocurrencies move. You're going to start to see the separation between amateur and professional. So now looking at this is going to be a lot more easy, and you're going to be able to probably just keep these rules locked in your head. Scroll all the way out on a 15-minute frequency. Establish an area where we have a range break and then a corrective wave. We want to add interior and exterior trends based on thin dotted and solid exterior ones. Enter a position size calculator where we should expect the impulse wave to touch the trend. We want to put the Fibonacci on there to see if the price levels are hitting and to be able to position our risk reward calculator. Take a position if step 6 conditions are met. So basically we need to make sure that everything is all set with the position size calculator and be able to have the risk reward match up with the projections. Once the 23.6 level is hit, once we're in a position, reduce the risk to over highs or lows. But also do that realistically. So if that means dropping the risk by about half, that's okay as well. That's what I normally do. Once the 38.2 level is hit, if there's a corrective wave in the trend, put the stop in the money slightly outside of the corrective wave once it turns around and touches the 50 level. Take profits at 61.8 and then log the trading information. Okay, so obviously we make a little bit of tweaks discretionarily when we're getting into positions and when we're taking positions live, but just to show you how you can actually navigate and channel trade this with Fibonacci and supply and demand imbalances and just using actual implementation of probability. This is how you're going to actually be able to trade.